Over the past few months, there's been a lot more discussion around a possible economic downturn, or even a full financial crisis, and one word keeps coming up over and over again: gold. So the real question is, what actually happens to gold if the economy crashes? Does it go up? Does it hold steady? Or do we get blindsided by something totally unexpected? To answer that, we need to understand why gold is even part of this conversation in the first place. Gold has been used as a store of value for thousands of years, long before modern financial systems existed. Because of that, it's developed a reputation as a kind of financial safe haven during uncertain times. When people talk about a crash, they're usually referring to things like a major stock market decline, rising unemployment, and bank instability. And in those environments, investor behavior tends to shift towards safety. And this is where it gets interesting. Gold doesn't move based on just one factor. It's influenced by a combination of things: interest rates, inflation expectations, currency strength, and overall market sentiment. So during a downturn, gold's behavior can actually vary depending on what else is happening at the same time. In some cases, gold value has increased as investors looked for stability. In others, it's been volatile, especially when people were selling everything just to raise cash. So it's not quite accurate to say when the economy crashes, gold goes up. A more accurate way to look at it is gold tends to get more attention when uncertainty rises. Another factor to consider is inflation. In some downturns, you also see rising inflation or currency weakness. In those cases, gold is often discussed as a potential hedge, not a guarantee, but a possibility. There's also a psychological component. When uncertainty rises, people tend to move toward things that feel more stable, more tangible. Gold fits that category for many investors, but it's just as important to understand what gold does not do. It doesn't generate income, no dividends, no interest, and it doesn't always move the way people expect, especially in the short term.
So when you put all of this together, you get a more balanced picture. Gold can play a role during economic uncertainty, but it's not a guaranteed outcome, and it's not a one-size-fits-all solution. For some investors, it's used as part of a diversified strategy, not the entire plan, but one piece of the puzzle. So what happens to gold if the economy crashes? In many cases, it attracts more attention. It may benefit from shifts in behavior. But ultimately, and I quote from my crystal ball, it depends. If you're looking at how gold fits into a retirement strategy, the key is understanding how it works alongside other assets, not in isolation. And if you want to explore that further, I've put together additional breakdowns at preciousmetalreviews.com. If this helped, please subscribe and share, and I'll keep bringing you clear, balanced insights like this.
Thanks for watching, and make it a great day.